Hello everyone, this is Jordan. This video is being recorded on the evening of Wednesday, May 8th, 2024. Thank you so much for tuning in. In this video, I'm going to talk about gold and the gold stocks, why we need to get even more bullish. And with that being said, this Saturday I'll be in Vancouver at the Paradox Hotel giving a presentation, and I'll have a couple charts from this presentation or from this video in my presentation. So this is kind of a sneak preview. Please come up and say hi. I would love to chat with you guys. And so that's that on Saturday. Let's get back to the video. Okay, so we need to put the gold's cup and handle breakout in historical perspective. We have it right here. This is a breakout from a 13-year base. And this is something I've talked about in past videos where historically you have the stock market and then gold and commodities where they alternate between secular bull and bear markets. Now, there can be an overlap. There is a little bit of overlap at times historically, and we're seeing that again. But basically, gold's cup and handle breakout here, that is signaling that this secular bull that the S&P has been on since 2009, this breakout is signaling that that's going to come to an end, if not in the next, if not this year, probably in the next year or two. That's my guess. And so as far as the alternation, if we look at this, we have the S&P 500 here, and these arrows show when either gold or the CRB, the commodity index, peaked. So you had the 13-year breakout here. You had the breakout here in 50, this cup and handle breakout. Commodities peak right here. Then you have, you had this breakout in the early 80s, 1982 in the Dow. Gold peaked in 80, commodities I think in 81. Saw the same thing here where here's the 2011 peak in hard assets. And then the S&P broke out 2013 from this 13-year base. I mean, from the perspective of gold, we had the S&P, of course, the secular bull ended 1968. Of course, then gold performed fabulously soon after that. Then gold was so devastated from this 20-year bear market that there wasn't a breakout to new all-time highs. But I consider the breakout at that point to be this right here. This was a 24-year breakout in 2005. And at that time, of course, stocks were in a secular bear. Now, gold and precious metals, as I have said, they were in a secular bear for a long time. But now with the gold breakout, we're leaving that and we're entering a new secular bull market. But the S&P, not quite in a secular bear yet. But again, I expect that very soon. And so historically, there was also overlap when you consider the gold stocks 1964. They had that huge breakout. Price of gold was fixed. So gold stocks, huge breakout in 64. And that's where the overlap was. The S&P continued higher for a couple more years, but I mean, in real terms, it was really over. So I think we're repeating something like that right now, and there is some overlap between the secular trends, but once we see the S&P 500 peak and get into that secular bear, that is when hard assets, not just gold, but commodities as well, that's when they're really, really going to move. And last thing I want to mention on this chart, we have the impact of the bond market. So this is the total return from the 10-year bond divided by the CPI. So it's real total return for bonds. And the yellow, these are secular bear markets. So this secular bear began 1965, right at the same time when gold stocks broke out. And now the secular bear really began here after COVID, or a little bit after that. You could say 21. Let's see here. Yeah, in 2021. So the secular bear begins, and after that, it took a little bit of time, but now we have the gold breakout. So the larger point here is we're in a new secular bull market for gold, but it's really, really going to get going and accelerate once the stock market, once this secular bull ends. So that hasn't happened yet. But another expression of that is, here we have nominal gold, is gold against the 60-40. I've been talking about this quite a bit lately. And so this is gold divided by 60% the stock market, 40% the bond market. So bonds are in a new secular bear, but stocks are still in a secular bull. And so this is why gold hasn't been able to really push up like this and give a real secular bull signal, like give confirmation. So we can see here, this was the confirmation. 1972, this move. This move in 2002, that was the confirmation. But the nominal bottom in gold occurred here before the confirmation. It occurred here before the confirmation. So I say this is really when the bull started. Maybe you can measure it from here. So the bull has started in nominal terms, the new secular bull. But again, once we get the 60-40 shooting up like that, that's going to give us confirmation of, it's another point of confirmation with respect to what we talked about in the last slide. So I tweeted this chart, which is the inflation adjusted gold price. So gold divided by the CPI, it's the same thing. And I don't want to get into saying if this is a huge cup and handle. I will say this is much closer to being a cup and handle than silver, but it's still kind of iffy based on the definition of a cup and handle. But that's semantics, because the reality is this is a 45-year base. Look at this. And it's tested it numerous times, once, twice, 3, 4. And that's what you look for in these bases, not just where you have it go like that and it's test the base 2 times. Again, this is already tested it 5 times. So this is setting up for a massive historic breakout. Again, gold against the CPI, the inflation adjusted gold price. This is setting up for a massive breakout. And this is really important because this is what the gold stocks tend to follow this. They follow this a lot more than they follow the gold price. You can see I posted this chart in my editorial today. And so here, in this color, well, this is gold. I don't know what this color is. But so here we have the Barron's Gold Mining Index in gold, and black is gold against the CPI. Black is the inflation-adjusted gold price, and the gold is the Barron's Gold Mining Index. So the gold stocks, the best index we have that goes back 100 years, or almost 100 years. And so we can see these tend to follow each other pretty closely. I mean, even, if you use the Huey or GDX, since here it even tracks better with it in black here, with the inflation adjusted gold price. And so look, fundamentally, the reason why this is such a good indicator, why it makes a lot of sense, is because gold stocks are all about margins. What is their margin? How much cash flow are they generating? Yes, the gold price is obviously essential to that, but what about the costs? We're in an inflationary time, an inflationary world. So that's why you have to look at the real price of gold, the inflation-adjusted price of gold. How is gold doing against oil, industrial prices, all that stuff? So that is why the gold stocks, historically, why they will continue, or why they have, and they'll continue to track gold divided by the CPI a lot more so than the gold price. But obviously, the gold price is a significant driver of that. It's just half the equation. And again, if I go back to that for a second, here you can see this is the inflation-adjusted gold price. So what do you think is going to happen to gold stocks when this makes a huge breakout? It's going to be liftoff, people. Okay, so getting into the last chart here. So the last chart here, this is a valuation chart. We're looking at gold stocks over the last, 40 years or so. Price divided by net asset value. So we can see this is a secular bear market here. What happened in 2011? Well, it's the end of a secular bull, start of a secular bear. So this is at 0.90 right now, and this is really current. So 0.90, and when we see gold move a lot higher over the coming quarters, you're going to see valuations pick up. So I think in the next 2 or 3 years, we could see the value 0.9, getting up to 1.8. So this could double at some point. The valuation could double. That's possible. That's not extreme, since we're early in a new secular bull. And so all this stuff is just to show you that the secular bull really hasn't even started yet. We're still really early in this. We're still in the first inning, or the top of the first inning. The gold breaking out of the cup and the handle in nominal terms, that is the first event. There's going to be several more major breakouts along the way. Most notably, gold breaking out against the inflation-adjusted, or I should say gold breaking out against inflation, or the inflation-adjusted gold price, that huge breakout. Then secondly, silver breaking above 50. It's a similar looking chart. And then when you get the valuations picking up and gold's at 3,000 going to 4,000, then you're a couple years into this cyclical bull market. You don't want to be one of those people who's buying in then. Now is the time to get bullish and get even more bullish on gold and the gold stocks. So leave a comment. Let me know what you think. And I'll talk to you guys again next week. And for those of you in Vancouver, I'll see you this weekend on Saturday. Thank you.